Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Tony Steuer. He is a financial preparedness advocate, author of a new book called Get Ready, a step-by-step planner for maintaining your financial first aid kit. Welcome to the Money Answer Show, Tony.
Hi, Jordan. Thanks for having me on. Pleasure to be here with you today.
Great to have you. Let's just start with a little bit of your background in the financial services industry and how you got to be a financial preparedness advocate.
Well, I started out quite a few years ago as an insurance agent, and after some time I became a fee-based insurance consultant, working predominantly with financial planners. And over the course of that time, then I started doing some litigation consulting, kind of running the gamut. But the one thing that I noticed continuously is that there wasn't a lot of simple information out there for consumers and even for advisors working in areas other than their specialty. So I wrote my first book, Questions and Answers on Life Insurance, which is probably the most exciting book out there in the market, and quickly branched out into other areas, eventually leading to writing Get Ready, because the one commonality that I found is that people really didn't understand how to just even organize their finances for their financial planner or for their insurance agent. And that's what led me to creating a financial first aid kit.
Great. So people need a first aid kit because you're saying they're not ready. Is that right? I mean, there's obviously people who are very ready and people who are not ready at all, but in general, are things getting better or worse as far as people's financial preparedness for dealing with what they have to in their financial lives?
I think that it's getting a little bit better. I think with the advent of the Internet is that people do have access to more information, and that some people are actually taking advantage of that.
But a lot of people are not. The reason you're saying people need to get ready is because they're, for the most part, not ready, is what you're saying, right?
That's what I've observed is I think for the most part, people don't even know the right questions to ask, and that they're so intimidated by the majority of the financial world that they just, they can't even get their traction to get started.
So what are the consequences of not being ready and not having, we're going to go over this in great detail, how they should get ready, but what are the consequences of not being ready and having all their finances together as you help them do?
Well, the big picture is being prepared for retirement, and we know that a significant percentage of the American population is not properly prepared for retirement. They don't have enough savings put aside. We have issues of students carrying a tremendous amount of debt when they graduate from college. So the issues run the gamut. Americans carry a tremendous amount of high interest rate credit card debt to overpaying for their cable bills. It runs the gamut.
Very good. We're going to go into various areas. The first thing you have are what you call 4 simple financial life changers. And let's go through those. The first one is to read documents. So you think people don't read documents. What should they be reading that they think they're not reading?
All of them. So in my experience is most people read, a very small percentage of the financial documents. And I think part of that is on the financial service industry itself is most of the information provided is impenetrable. Take, for example, an insurance policy. It's not that easy to read or to understand what you're looking for. So, and part of that comes from a standardization. So if you're looking at an auto insurance policy from Company A and an auto insurance policy from Company B, they're not necessarily going to read the same.
Yeah, and a lot of it's regulatory as well. I mean, the regulators require certain disclosures in legal language, which some people can't make heads or tails of.
Exactly. But there's no singular type of placement, for example, like, on a nutrition label on, a can of soup, where you have everything in the same order, on all the different cans of soup, and you can somewhat more easily compare the two if you can make those crazy measurements of what's a quarter cup and all that. But, I think you get where I'm going with this.
So what are people missing by not reading these documents? I mean, if they read them more carefully, what would they get out of that?
Well, they might, we saw it in the last recession with the people who lost their homes, is they might not have realized what their interest rates could adjust to on their mortgage. And that's a pretty dramatic example. Some of the people didn't realize they had balloon payments. We see it on renters and homeowners insurance policies where people don't realize that the typical homeowner's policy doesn't cover flooding, and yet they live in an area that may be prone to flooding, and they really do need flood insurance. And they think they have it, but they don't really have it.
That's happened a lot in the Midwest lately, with a lot of people getting flooded, not realizing that. Yes. Okay. Your second financial life changer is to watch your debt and avoid consolidation. What's wrong with consolidation loans?
Well, the consolidation moves are often the companies promoting those aren't always working in the consumer's best interest. Is oftentimes you might be giving up, and that point was more geared directly towards college graduates, but it does work across the board. But especially with college graduates, if they have a loan through the federal government, they can work with the government to go onto an income-based repayment plan. So it might be, let's say, 5% of their income. Whereas if they go into a private debt consolidation loan, basically they're just refinancing the terms with an extended repayment period, meaning it'll take longer to pay off the debt, and they may not be able to get that they will definitely not be able to get the income-based repayment. So it could be a much higher percentage of their total income.
So that's for college consolidation. How about for non-college consolidation, regular consolidation loans? People have a bunch of different credit cards. They'll consolidate into one. What's wrong with that?
Well, in that context, it's not always a bad move, but it can oftentimes work the same way where, the monthly payment is lower, so the consumer says, okay, I have a lower monthly payment, mission accomplished. However, at the end of the day, they're still paying the same amount out over the long term, and the terms may be for a much longer payment period, so they're not really getting ahead on paying off their debt. They've just shuffled it around.
Yeah. Your third financial life changer is to make a plan before acting. So you think a lot of people don't plan before they make major financial moves?
100%. I would say maybe 98%. So what I've noticed is that people spend less time thinking about their financial moves than they do shopping for a new television, and that their eyes quickly glaze over when you go into the differences of different financial plans. And the other thing is that people tend to fall for, the really shiny object, of something that's a little too good to be true, rather than going with something that's not quite as exciting, but is maybe a more solid financial product.
What would be an example of a shiny object that people buy incorrectly?
Well, let's say, we'll take latest IPO, as a lot of people may jump on Uber or Lyft as an IPO because they think, oh, this is a hot new thing, where, maybe buying something boring like Bank of America stock, maybe, and I'm not promoting either stock, and I don't own stock at either company, but the Bank of America may be a little more solid because they've been around for a long time and but they're not exciting to tell your friend, hey, I bought some Bank of America stock today.
Yeah, okay. And your fourth life changer is tackle one thing at a time. is people tend to multitask and then they don't get things done. Is that what you're saying?
That's part of it. And also it's very easy to get overwhelmed is because all of a sudden you're taking on a lot of things. It's, jack of all trades, master of none, is that you need to pick that one point of focus and start there and do it well, and then move on to your next financial task.
And so a lot of people don't, you're saying?
No, I think people, spend the minimum amount of time because we all live in a world where there's just not enough hours, and it's a tendency to, get things done and crossed off our list rather than taking the time to make sure that we've done it well.
You have a website, TonySteuer.com. What can people find at that website?
Well, they can find some useful tools like optimal insurance deductible calculator. They can find one-page PDF worksheets that match Get Ready. For example, there's a cash flow worksheet, there's a budget worksheet, there's a retirement tracker, there's a personal property inventory, all kinds of things to help you get financially organized and create your financial first aid kit.
And you also have a Get Ready newsletter. How do people sign up for that?
They can sign up for that at TonySteuer.com, and it comes every other week or so. I make no promises on that, but as quickly as I can get it out.
Very good. Okay. We're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Tony Steuer. He is the author of a new book called Get Ready, a step-by-step planner for maintaining your financial first aid kit. He is a financial preparedness advocate, and you can find out more at his website, TonySteuer.com. We'll be back after this. Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Tony Steuer. He is a financial preparedness advocate. His website is TonySteuer.com, and his new book is called Get Ready, a step-by-step planner for maintaining your financial first aid kit. Welcome back to the show, Tony.
Thank you, Jordan.
So one of the things you've done is to put together what you call the financial principles of dealing with financial advisors in various ways. And so a lot of people are confused about what they should be getting from a financial advisor, and this gives them some ideas. So let's go through those briefly. The first one is your advisor should act in your best interest. Now, there is this fiduciary rule out there. It's kind of been watered down a little bit, but how do you know that a financial advisor is actually acting in your best interest?
Well, it can really vary by the financial product. As you point out with the fiduciary rule, is it, even though it's been watered down, it applies, I would say, more strongly to certain financial advisors rather than others. And, for example, insurance agents are not covered under it. And so their commission, they're compensated through commission. So, they're not acting, they may not have the same incentive to act on a consumer's behalf because they may be acting, on more the behalf of getting a higher commission. And that's not to say that any commission-based salesperson is not going to do a good job for the consumer, but it does point out that they may have an inherent conflict of interest.
So is part of it a disclosure? I mean, when you buy an insurance policy, a cash value policy, the commission is not explained, or you can even ask, and they often will not tell you what it's going to be. Should you always know what commission fees or bonuses are involved when you buy any financial product?
You can't, but you can ask the person how they're being compensated. And I think that usually most people will share it. They may not share, the entirety of their compensation structure because sometimes those can be incredibly complex. However, they will say, we're paid through commission if you buy a product. And depending on the product, we may get paid a higher or lower rate of commission. But at least it gives you an idea of where their interests lie.
Since you know life insurance so well, give people a rough idea on somebody buying a cash value policy. It could be variable life, whole life, universal life. Just roughly, what kind of a commission is paid on the first year of premium? What percentage?
Well, it depends, on a whole variety of factors, the company, the agent's experience, what have you. But it can range from 50 to well over 100% of the first year premium.
Meaning that if it's 100%, you haven't gained any cash value in the first year because all of it's gone to the commission. Is that right?
Correct. And some whole life and universal life policies, variable, are a little bit different since they're regulated by the SEC. They can have surrender periods for up to 16 years and surrender charges of 90 to 100%, for the first 4 or 5 years sometimes.
Yeah. Okay, the next rule is you should receive customized service appropriate to your needs and goals. Now, don't you need to have a lot of money to get customized service? I mean, a lot of these firms today have kind of national customer service centers where it's not customized at all. Can everybody should expect customized service?
Well, I think that they should expect something that's somewhat close to customized service. And what I mean by that is that it should be an appropriate product. Since we're talking about life insurance, we can stick with that for a minute. For example, if somebody says, I need life insurance to cover my wife for 10 years, that's a 10-year term life insurance policy, and that provides the coverage that is strictly needed. And it's not a cash value life insurance policy because they're not looking to build up a cash value, and they're not looking 10 years down the road, and you have a surrender charge that's going more than 10 years. So, I think you can have some very basic customized service like that where you're not putting a square peg in a round hole.
Yeah. Your next rule is to have free choice. You're saying people should be able to shop around and get competitive options. Is that something a lot of financial advisors don't want them to shop it around and kind of resist that?
Some do and some don't. I think, unfortunately, there's no real regulation on that in some areas of the financial services industry, and I think people need to realize that they do have the free choice and that products and options will vary significantly between companies, so that they have to take it upon themselves to, do a little bit of research, learn something, and get some, different information on a couple different products.
Often it's difficult to compare as well, since it's not apples to apples. They've got different bells and whistles, so it's hard for the individual who's not an expert to know what to make of these different options. With a lot of products, that's 100% accurate. I know you've been doing this for a long time, so you've seen all the various financial issues out there over the years. And I think that's something where people should try to simplify it and go with products that they can understand where they can find them. Of course, as we both know, is in some areas that's a little bit challenging to find. Your next one is you should receive an answer to any question. Do you find that some financial advisors are reluctant to answer certain questions?
Definitely, or that they hedge on the answer. And I think that is also, I have an article on my site about, scams and red flags, and that's always a red flag is when somebody is ducking your question or not kind of answering it, where they sort of answer it, but then it goes off in a different tangent and they've never fully answered the question.
Yeah. The next one is you have a right to pay fair price or premium. In many cases, you don't even know what the premium or price of commission is. How do you do that?
Well, so that's where, it does, a lot of these do come back on the consumer, that the consumer does have to understand that they have a role in this, and that since it's their money, that they have to take it upon themselves to take a few minutes and learn something as painful as it is. Take a few minutes to educate yourself, to pay for it, and then, it's really your right to find out what that fair price or premium is and to hold the company responsible for it. What we've often seen in the financial services industry is that somebody will be promised something at the point of sale, but by the time the contract comes through, the terms are different. And that's not fair to the consumer.
Yeah. It's hard, for example, in a mortgage, where you get to the closing table and you've got all these people standing around you and you can't read this whole long contract and the points have changed or the fees or something has changed. You're in a position where you really almost can't refuse to go ahead with it.
Correct, and that is an issue. However, if you are prepared and have looked over the documents beforehand and you do see a change, then you might be able to better ask the question to see if that change is legitimate or not.
In my experience, you don't get to see the full mortgage documents before the closing. You're supposed to, but it often doesn't happen.
Yeah, that's been my experience as well, unfortunately.
The next thing you say, you should always be informed. So you're saying you should get everything in writing and not only take things orally. Correct,
because an oral promise, there's some issues with oral contracts, of course, and I'm not a legal expert, but if you have something in writing, it's a lot harder to be disputed.
Yeah. The next thing is you should expect to be treated fairly and respectfully. Do you find that that's not happening as much in the financial services industry?
Well, I would say for any company where you call them and for your convenience, you're expected to hold for an hour. So I think, unfortunately, that's an issue, with corporate America. If that's the best way to phrase it, is that I think any service professional or company should treat their customers like they actually are their customers.
Yeah. The next one is you have the right to full disclosure and updates. I mean, often this disclosure can go on for pages and pages. It's all legal, but it doesn't really mean anything to anybody, even though legally, I guess they're off the hook if they've disclosed this investment could go down in value or things like that.
Yeah, and that is the reality, is that a lot of these disclosures are completely unfathomable, even to people, in the industry. So I know for myself, I've seen things from insurance companies that are incredibly challenging and complex, and it take me hours to figure out just what they mean. But, at least, if the companies are sending it out, you have a chance of finding it. But if the companies aren't even providing it, then you have zero chance of finding it.
Whatever happened to plain language laws? Supposedly, like in credit cards, they were guaranteed to have plain, understandable language. Is that still around, or has people forgot about that?
That gets into... we definitely don't want to get political on the show, but I think, unfortunately, our legislators in Washington get a little bit distracted on a whole variety of issues, and that these things get watered down over time, and that they lose their effectiveness.
Yeah. Your last one is you should be able to cancel or change a financial service or to be notified of any change. Is that something that's often not happening? People are forced to take something after like a 3-day rescission period?
Sometimes, and what's more common is that they're not notified of changes, or they're notified of changes, I would say not in a timely fashion, so that they can reflect on those changes. One thing that I've noticed personally, and I was talking to my mother-in-law about this the other day, is that the period to pay some of your bills has gotten much shorter. Whereas you might have had 21 days after receiving your credit card statement to pay the credit card statement. Now maybe 14 days, and then the companies say, well, we have to receive it with enough time for it to be processed. So, the companies are contracting the periods where you can make these changes.
And a lot of people are not aware of that. Then they pay late fees and all that if they don't do it right.
Exactly.
Very good. All right, so those were called the financial principles to dealing with financial professionals in various ways. I think that was very helpful. We're going to take a break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Tony Steuer. He is a financial preparedness advocate. His new book is called Get Ready, a step-by-step planner for maintaining your financial first aid kit. And you can find out more at his website, TonySteuer.com. We'll be back after this. Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Tony Steuer. He is a financial preparedness advocate. His website is TonySteuer.com. He has a book out called Get Ready, a step-by-step planner for maintaining your financial first aid kit. Welcome back to the show, Tony.
Thanks, Jordan.
You have a lot of expertise in insurance particularly. Let's just briefly talk about life insurance. There's two schools of thought. There's buy term and invest the difference, and there's cash value as a forced savings mechanism and has tax benefits. How should we decide in getting life insurance which way to go?
Well, I think that people have been looking at this not in the way they probably should. I think that the approach should be really thinking about what you want to accomplish with your life insurance and what your needs are, rather than letting it be product driven. That the whole conversation should be around you and your financial plan, and not about what products may be attractive.
I mean, do you find most people are underinsured or overinsured?
Most people are underinsured. Especially if they've been buying cash value life insurance, they can't afford to buy as much insurance as they need. So
is the best solution to do a combination, do some term and some cash value?
Sure, if that's what the needs are. So that's the thing. It should always be needs driven.
Yeah. And as far as cash value, between traditional whole life, variable, universal, and index universals, the kind of new one, do you have a favorite?
None of them.
Okay.
For the most part, the only type of permanent life insurance that I think most people should have is called guaranteed universal life insurance. And it effectively functions like term life insurance. It has a guaranteed premium and goes to a guaranteed age with a guaranteed death benefit. So you're getting everything guaranteed. Whole life is your safest type of insurance. Universal life, variable life, and index life all have some degrees of variability in the components, and that makes it more risky. We're talking about insurance here. Insurance should not be a risky part of your planning portfolio. That's the whole point of insurance, is to take out the risk from your life.
There's a whole bunch of people that do this so-called bank on yourself, which is using life insurance. Do you think that's a good idea?
I would say that for most people it's not. While I'm not an investment expert, I am an advocate of minimizing your expenses, and it's not the most inexpensive way to go. And also, if you're using whole life policies, as I mentioned earlier, is you could be talking about having your money locked in, with surrender charges for up to 16 years and some pretty draconian surrender charges. So if you get into something and you find out 4 years later that you need to get out because your financial situation has changed and you need access to your cash, you're locked in. Now, that may happen with an IRA, but at least with an IRA, if you stop contributing for a year, your whole plan's not going to fall apart.
Or it could lapse if you don't pay the premium, is what you're saying.
Exactly.
And how about annuities? They're popular these days as a way of saving in a tax-deferred way. And again, there's variable annuities, there's index annuities, there's fixed annuities. How do you pick, and when are annuities appropriate for somebody's portfolio?
Well, I think annuities are an important part of the portfolio, especially, I think, on the spending side when you're going into the distribution phase. But again, I would say that people should opt towards the fully guaranteed products rather than the products that have a whole bunch of variable components, such as indexed annuities, which are super popular, where the insurance company controls a number of the facets of the policy, where the insurance company can change what's called your participation rate. So you may get credited 10% in interest, but the insurance company can say, well, instead of you getting 100% of that, you're only going to get 80%. And they don't have to justify that. They can just declare that from year to year what your participation rate is going to be. So you're taking some risk there. You're taking risk with the return, where, again, this should be a very guaranteed, safe part, very conservative and boring part of your investment portfolio.
It sounds what you're saying is a lot of people are in policies you think are not good for them. Their costs are too high. They're locked in for too long. They've got surrender charges. They don't control things. It sounds like there should be a lot of unhappy people in various insurance products.
100%. That's 100% accurate.
Okay. Unusual for somebody in the insurance business to say that, yes.
Well, my whole niche as a consultant to wealth management firms is helping people unwind their insurance, their life insurance and annuity products. That's been a big niche for me, is that the top financial planning firms, know that those are not good products for their clients, and they try to get them out of most of them where they can.
Okay. You've also written about disability insurance. Just briefly, when do you need disability insurance in addition to what you might get from work, and there is Social Security disability as well?
Correct. Well, Social Security disability is, we pretty much everybody is eligible for it. However, it's very difficult to qualify for, and it only pays for a total disability. And then even if you do qualify, it doesn't pay a whole lot, so it's not going to replace 100% of your income for most of us. And you get into the same conversation with group insurance, as group insurance can also be limited. Most group insurance policies will replace 50% of the base salary up to a certain monthly cap on a pre-tax basis. So when all is said and done, when you take into account taxes, you take into account that maybe you get a bonus or other compensation, and you may only get on a group insurance policy 40% or 35% of your pre-tax income. So individual disability insurance, I think, is something everybody should consider if they're dependent upon their income, on their current income.
Should it only be if you're in a job that has risk? I mean, if you're in a desk job in an office, not too much is likely to happen as opposed to if you're working in a steel mill or something. Does that make a difference as to whether you should get an independent disability policy or not?
No, because the thing with an individual disability insurance policy, there's two components to consider here, is an individual disability insurance policy will pay a partial disability benefit if you have a partial disability, and that the odds of somebody having at least a partial disability for lasting 90 days or more, which is the elimination period on a disability insurance policy, can be 1 in 3 if they're 20 years old, that they'll have that type of disability before they're 65 years old. So the odds are pretty good that you'll have some type of disability that will keep you out for more than 90 days, but probably not permanently. The average disability will last, I think it's 3 to 4 years. That one I can't remember offhand.
But it's not necessarily something that's happening in the office. You could be out on a camping trip or motorcycling, or you could have a disability not only related or caused at your job. Is that correct?
That is correct. Now, for somebody working in a steel mill, an industrial accident would be covered under their workers' compensation, which is a form of disability insurance. So, there is that difference that there might be something appropriate to a specific occupation, but again, it only as you point out, it only pays a claim if it happens during your work hours.
Whereas disability covers 24 hours, wherever you are, whatever the reason may be, right?
Exactly. You have cancer, or you have, let's say you have a heart attack, which is a very good example. So you have a heart attack, you're out for 2 weeks, then you go back to work, but your doctor says, okay, well, for the first 6 months, you can only work 2 days a week, phase yourself back in, see if you can handle it. Then an individual disability insurance policy would pay a partial benefit to replace those 3 days a week where you're not working.
Yeah. Let's just briefly go to graduates. We just had a lot of people graduating from college. What are some of the things that people getting out of school that maybe have not done too much personal financial planning because they haven't had money or a job yet should be thinking about to get going in the real world, so to speak?
Well, I think they need to be thinking about how they're going to organize their finances and deal with it. I think one of the things they should do is create a financial first aid kit, which is why I created Get Ready in the Get Ready system. But to start thinking about, what their plan is, how they're going to do this.
Particularly student loan debt is a big issue these days. People coming out with I think it's an average of about $38,000 student loan debt. How can they handle that when it's such a huge amount over a long period of time?
Well, I think that they need to walk back and, first of all, set up a budget, figure out where they are. What kind of income do they have coming in? What type of expenses? And then they can start to set goals and priorities in terms of managing their student loan debt. As we discussed earlier in the show, if they have a student loan through a federal government plan, is they should consider whether applying for an income-based repayment plan to keep their student loan payments down may make sense for them, although that could conceivably stretch out their repayment period. But I think that they need to strategize with their entire loan as one portfolio and take a look at it all together rather than just deal with each loan separately. Have a macro overview.
How about forgiveness programs? Are you think those realistic for people to qualify for?
I think for some people, I'm not overly familiar with them. I think it depends on the situation. If you can qualify, you might as well give it a try. Can't hurt.
It can't hurt, indeed. Very good. All right, we're going to take another break. This is Jordan Goodman of the Money Answer Show. My guest this hour is Tony Steuer. He is a financial preparedness advocate. He has a newsletter as well called the Get Ready newsletter, which you can find at his website, tonysteuer.com. His latest book is called Get Ready, a step-by-step planner for maintaining your financial first aid kit. We'll be back after this. Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Tony Steuer. He is a financial preparedness advocate. His website, tonysteuer.com. He's got a newsletter. He's got all kinds of things on that website. His book is called Get Ready, a step-by-step planner for maintaining your financial first aid kit. Welcome back to the show, Tony.
Thanks, Jordan. Glad to be back.
We're going to go just briefly into some of the different things, and all of the worksheets in the book are also on your website. Is that correct?
That is correct. All the worksheets can be downloaded as fillable PDFs.
Very good. All right, so just some of them. Emergency contacts. Just tell us why you need to write down all your emergency contacts.
Well, part of when I started writing this book is one of the goals was also for people to have it while they're living, but also so that their loved ones can have it if, for whatever reason, they're not in the picture. Either they're out of town or they are incapacitated or they pass away. So it's a way of somebody else, besides you organizing it for yourself, it's so that somebody else can have it if they need to step in and manage your financial affairs.
Yeah. Personal papers and legal documents. In general, how long should you keep these kind of things?
It depends on the document. So if you have something that, let's say, is property or investment related, you'd hold on to it as long as you hold on to that piece of property or investment so that you can track the cost basis and any other factors for tax. If you have something that is strictly income tax related that you're using for deduction, let's say a charitable donation, you'd want to hold on to it for 7 years. While you can only be audited under regular reasons for up to 3 years, the IRS can audit you for fraud for up to 6 years. So you want to hold on to any tax documentation for up to 6 years. You
also said to write down the contents of your wallet. Why would that be?
Well, if your wallet ever gets stolen, then you don't have to try to remember what was in it. So you can easily make a call to any credit card companies, to the DMV, AAA if you're a AAA member, to take care of getting everything in your wallet replaced.
You said to write down everything about children. Why is that important to do?
Well, so when you're filling out forms, let's say for summer camp or college or whatever for your children, is you have that information handy. So it's more so that you can find all your stuff in one place rather than perhaps a strictly financial reason on that one.
And you've got military service. Why should you write everything related to your military service?
Well, that's important on two. One, it is important at death because your spouse may want you to have military honors or your family to have military honors. There may be some military benefits that the survivors are entitled to. And it also helps you keep it fresh because, 20 years from now, you may not remember, things that were important about your military service to you.
Yeah. You have what you call digital life, devices and services, your cell phones, your tablets, your computers. Why do you need to have all those things?
Well, so people can find all your devices and to be able to access them. I guess that's, I haven't dealt with Face ID, so I don't know how you could do Face ID, but, we all have different passwords to unlock our devices, so knowing where the devices are and how to access the devices come in really handy for somebody, or even for ourselves, if you forget, what that password was you set.
Yes, and you also say the same for cloud storage and just have all the different passwords for all the different websites you're dealing with all the time.
Yeah, because it's, I don't know about you, but I'm always consulting, I have a spreadsheet for all my passwords, as I'm always consulting my spreadsheet because I'm like, what the heck was my password here, or my secret question? And, I can't keep track of all that stuff.
Absolutely. Then you have a whole chapter on listing your assets. Just basically, what's the purpose of having all your assets listed out?
Well, a couple purposes is like, for example, we were talking earlier about mortgages, is when you go to apply for a mortgage is, they ask you to send in, documentation sometimes on your assets. So it's good to have it all in one place so you can easily have your information organized. And that way you also have it organized for your heirs if something should happen to you. If your family doesn't know about it, it's going to go to unclaimed property, which means the state will get to manage the money rather than it passing to your children or to your spouse.
Yes. You have a whole chapter on organizing your retirement plan. What are the things people need to do to organize their retirement plans?
Well, just make note of all your accounts. Is one other thing that happens is sort of like unclaimed money is people may forget that they had a small 401k at that company they worked at for 2 years. So by documenting all their plans is, then they go back and go, oh yeah, I forgot I had that 401k over here or that IRA over there. So it's a way of making sure you're able to tap into all your assets that are yours. Yeah.
You've got a whole chapter on real estate, not only your primary residence, but timeshares, second homes, rental homes. Why is that important to write down?
For the same reasons, is so that you're able to track it and for yourself and easily have it accessible. So, for example, if you're applying for a new loan, and to have it, let's say the binder was also designed for you to be able to use in an emergency. So if you lose all your papers because you have a house fire, is you have the basics of the property or the asset or the retirement plan in your binder, in your Get Ready binder or Get Ready planner.
So when you have a fire, you rush for that binder, basically. That's the one thing you need.
Well, exactly. Instead of sorting through all your drawers, trying to go, okay, where's my pink slip? I mean, you're not going to be looking for that kind of stuff. You have a half hour to evacuate or 20 minutes, and if you can grab a binder that's got all your important stuff already logged in, you're set to go, and you can worry about other things like your pictures and whatever other mementos you want to grab.
Then you said to take inventory. So this is like for home insurance purposes, write down all the different aspects of your house?
Exactly, for the same reason. But, it can also come in handy, besides a fire, is let's say your home is burglarized, that you can easily say, oh, yeah, that was the TV, and that was a serial number for my TV. Or if you've uploaded pictures to your cloud account of property in the different rooms, it can come in handy for a number of reasons.
So you've got other sections on debts and insurance portfolios and estate planning and taxes. So overall, kind of what difference will it make in people's life to have their financial survival kit ready as opposed to not?
Well, it would make a difference in terms of filing a claim. I had a friend of mine who was a victim of the Camp Fire in Butte County and lost everything in minutes. However, he was an insurance professional who was highly organized, and so he had his homeowner's claim filed the next day because he had all the information he needed located outside of his home, whereas other people, they may be waiting 2 or 3 months before they're even able to start the process because they're still trying to access all their information. The other time it comes in handy is, if you do have to take over somebody's estate when they pass away, is you're able to find everything right away because you know where it's located or you know what you're looking for instead of looking through, file drawers and file boxes in the garage or basement and trying to figure it out.
So you find a lot of people are disorganized and it causes pain not only for them, but the people cleaning up after them, whether it be a fire or a death. Exactly. Very good. Well, we've covered a lot of ground. People can really get some good information at your book called Get Ready, a step-by-step planner for maintaining your financial first aid kit. And all the worksheets that are in here are also at your website at TonySteuer.com. Is that right?
That is correct.
Very good. Well, thanks again. My guest this hour has been Tony Steuer. He is a financial preparedness advocate, and you can find out more at his website, TonySteuer.com. You can see we've covered a lot of interesting ground, and this will really help you get organized in a very good way. Thanks so much for being a great guest on the Money Answer Show, Tony.
Thank you for having me on, Jordan. It's been my pleasure.
Thanks again. We'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.